The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk, pleased to have with us for our analysis today, Tyler Schau with agmarket.net, who is on location at the National High School Finals Rodeo out in Wyoming. Tyler, good to have you on the show today, buddy. How are you?
I'm doing good. It's good to be back on with you.
Well, first off, before we jump into the markets, we got plenty of green on the screen in the Grains Tuesday to talk about and more. But, you know, I mentioned you're out there in Wyoming. Paint this picture for us. How are things going on out there at the rodeo?
Rodeo is going really good. Just about halfway through the week. For those that aren't familiar, it's the largest rodeo basically on the face of the earth. There's something like 1,600 contestants out here from all over the United States, Canada, Mexico, Australia. And I get just lucky enough, my nephews are out here competing, and I get to come out and help them, and then get to help some other boys from North Dakota that made it in the steer wrestling. And so actually one of our other partners, Jacob Burks with agmarket.net, he's also out here helping a bunch of boys in the steer wrestling, and his daughter made it as well. So just having a good time, visiting a lot of old friends and helping some young folk out.
Well, that is awesome, and it's really cool that you guys are doing that, and best of luck to everyone who's involved there the rest of the week out there in Gillette, Wyoming. So I tell you what, a lot to unpack here. The markets this week, I would say weather is, come back in here in a fairly big way. We got the Black Sea deal and more, but I mean, I look on Tuesday's trade, corn up some 30 cents at the close. I mean, what a way to wrap up the day there, this corn market, which kind of fell apart, finding a little bit of premium once again here, Tyler.
Yeah, we woke up this morning and we were up, 12, 13 cents in corn. Our assumption, just Jacob and I working out here remote, was that we were going to see another day of corn up in the morning and fading throughout the day session. We did some work in our mobile office and went up and watched the rodeo for a couple hours. Came back just a little bit ago to see corn up 30. And really what it dials back into, if you look at a 5-minute chart, it really shot up right around noon when those new GFS and Euro models were released. And basically the Euro model was trending drier, and now you've got all the weather models in agreement for a drier and hotter 10-day period coming up here. So, I want to caution people on the heat. The models are kicking out, 100-degree temperatures. The analysts that are going through all the models and making their predictions aren't quite that hot, but you're still probably going to see 90s in a large portion of the corn growing area, and a lack of rain at a significant time where we need rain and cool temperatures. So put a little bit of weather premium back in this market, and that sure helped.
Well, and you mentioned a critical time for corn. I mean, it's pollination time, and that's no secret to any farmer out there. And, I got a good windshield view of the crop from Iowa down through Missouri, Illinois, and into Kentucky here just this last weekend. And, there's some fields that look good, but there's some fields you could tell that they are searching for moisture, some of that corn rolling a little bit. So to your point here, getting some premium back in, this is not a good time. And I'd have to think that, look at this corn market specifically, if I'm a farmer who did not, get some sales on the books, this might be one of those last opportunities here with a little bit of a weather rally.
Yeah, I mean, one of the sayings is you're going to kill the crop at least 2 to 3 times throughout the year, and by my count, this is the second time. And if you missed the first time, which was easy to do that was a massive and very quick move higher and return back to sender. The market's offering you another opportunity to get some sales, and I know one of the things that a lot of producers are going to struggle with is looking at 530 on corn and comparing that to late June when we had $6 plus for a couple days, and they're going to think they're making a poor sale. But what I try to remind people is, wasn't all that long ago we were looking at 480 corn on the December board. So if they're not in, it's going to be tough to fill on these kind of moves.
How about wheat? With corn and wheat together, how much influence are we getting from this Black Sea grain deal business? Because it just feels like the market has really taken this and just kind of said, oh, okay, well, we've heard all this before. So, I mean, your thoughts, how much is corn and wheat getting support from what's going on over in the Black Sea right now?
I think it's offering some support. I mean, your winter wheat varieties were going to close up 15 in Chicago and 12 cents in Kansas City. It's hard to say the weather is creating any kind of market for crops that are currently being harvested. The grain deal did not get extended. We heard about that yesterday, and actually, that was kind of what I was alluding to with corn. We woke up yesterday morning, wheat was up strong, and it faded throughout the day. We were kind of looking for something we kind of felt like the market is just getting tired of this export corridor agreement, and then throwing the fact that a year ago it was a big deal because we didn't know how grain was going to move. They have figured out how to get that grain out of the country. It might not be the most ideal, but it's not like that grain just stops and sits in silos for months and rots. Like, they're going to figure out how to get that product moved. That's the function of an efficient market, and it's doing its job. And I think the market has just kind of realized that it's not quite as big a deal as it once was. It does kind of seem like maybe Putin didn't get the reaction he was looking for, because overnight he sent some airstrikes at the Odessa terminal, and that probably created a little bit of buzz and helped get this market primed. But I really think you got to go back to weather. The fact that corn led it almost twice the size of the move that beans saw just tells you how important this time period is for corn development.
Well, on the spring wheat side, I should ask you as well. I mean, you're there in North Dakota, you're heart of spring wheat country, and I know we've heard some issues with spring wheat in certain areas. What's your thoughts on how the crop is looking and what this market's been doing lately?
That's a mixed question. There are parts of the state of North Dakota where the crop is struggling. I wouldn't say 2021 was an historic drought. We're not at that kind of levels. The biggest issue you had was a lot of spring wheat that got put in early. Just that heat there in May really took its toll and forced it to start heading out. So if you're in eastern North Dakota, northern North Dakota, the crop is probably less desirable than what you've wanted. I've heard anywhere from 60 to 70% of a normal crop. If you're in southwest North Dakota, it's a little bit of a different story. They've had good rains, crops look good. I don't know if I would go and say record yields, but average to above average crops for that portion of the state. So, I mean, all in all, we're going to have some issues. Our estimation is that, when we got the acreage report on June 30th, we saw an increase in spring wheat acres, both in the U.S. and then a few weeks earlier from StatsCan, we got that. Our thinking is that the reduction in yields will basically just offset that increase in acres, and we're right back to total production where we thought it was going to be prior to the end of June. So, it's not like we're facing a severe shortage of hard red spring wheat in the U.S. or in Canada or across the globe. So, I mean, I've been encouraging producers to get some more hedges on. We have been sneaking in and buying some puts and selling that September board up around that 880 mark has been a good price to sell it at basically for the last 6 months. So I'm not going to change course yet.
We're having a conversation here today with Tyler Schau from agmarket.net. He's on location at the National High School Finals Rodeo out in Wyoming. Tyler, let's talk soybeans real quick. Fundamentally, soybeans feel like the strength of this grain complex overall. And I know we're testing that resistance at psychological $14 mark again here, no beans. What's your thoughts in this soy complex? Just overall, now that we've moved past the WASD, weather typically is more of an impacted August when it comes to beans. And what's your thoughts just overall in this soy complex right now?
You hit the nail on the head. The fundamentals for any of the grains are the most positive for soybeans. We're looking at ending stocks that are still, at levels that leave the market a little bit uncomfortable. And then you took out a lot of acres on that acreage report. And so, the fundamentals are there to keep soybeans supported. And then throw in this weather issue. You're right. Heat right now isn't going to kill the soybean crop. There's a lot of places around the country where beans have fared pretty well. That's going to be more important when we get into August. We'll see how that shakes out. And if you have a very hot and dry August, now you start to challenge some of those resistance levels that we've got on beans up above the market here. And you're right. $14 has been the spot that has really stopped this November soybean contract basically since after harvest last year. So that's anyone again that felt like they missed an opportunity to get some stuff marketed there in June. This market's given you a good spot to, if nothing else, come in and buy some put options, build a floor that's far above your cost of production right at the moment. And especially if you're in one of those areas where you're unsure of production, make sure you're using some type of option strategy that keeps you flexible, doesn't tie you to delivery.
We talk a lot about how the market's kind of leaving the top side open, so to speak, and obviously a great move there in grains. And for a lot of folks, they got to think about it at this point. I want to go to livestock though and talk cattle with you. This cattle market maybe feels like I say this and then it doesn't happen. Feels like we're getting a little top heavy. So, are we looking at some of the opposite here in cattle? Do we maybe look at some puts, but then sell some calls and kind of create basically a so-called insurance type here in this market? Walk me through what you're thinking in cattle right now, I guess, overall, Tyler. What should we be doing if I'm a rancher looking at my cattle marketing right now?
If I'm a cow-calf producer, I keep coming back to, you can go out and buy puts. You can use the LRP, the livestock revenue protection insurance. Use one of those tools. And if you end up having to pay premium on the option or the LRP, that probably means you're selling the highest price calf you've ever sold in your lifetime. So it seems foolish to sit here on our hands and not get some level of protection on. I know a lot of people have bought LRP along the way. And if that's you might want to be looking at how do we use put options now to manage the gain that we've seen in this market. I'm not a huge fan of selling calls over the top of anything right yet. I've described the cattle market for a lot of people. When you get up into these record levels, there's really no roadmap. So it's kind of like you're walking through a forest with a blindfold on, and we don't really know where we're supposed to be going to. There's a lot of people think feeders and fats for that no matter are going to move even higher. I would argue the fundamentals are there. The numbers of cattle out there to go into feedlots to get slaughtered are historically low. And as long as the consumer is willing to come out and spend money to buy beef, I think there's more room to move higher. It's those things we don't see coming that are gonna cause this market to flip upside down. And what I've told everyone along the way is any market you've ever seen where you've seen a run to historically high prices, they generally come back down to a much lower level, and you just never know when that's going to happen. It's easy to look at a chart after the fact and go, oh yeah, I should have known this was going to come. Harder to do in real time. So really a big fan of getting some type of hedge protection on, whatever fits your risk parameters is what you're going to have to use. And that's just a discussion you'll have to have with your broker.
Yeah. And I know on the cash side too, sale barns, feedlots, everything, just continuing to remain high. I know up there in the north, man, oh man, we've seen some lofty prices at the sale barn here in recent months, haven't we, Tyler?
Yes, I've seen some calf price is well over $1,500 for 8-weight steers, for 7-weight steers. I mean, bringing really, really good dollars when they go to the sale barns. You do have to be kind of careful there. That one of the things that is also at play is you've had an area of kind of the central part of the U.S. that Kansas, Nebraska, Oklahoma, the Texas Panhandle that was incredibly dry for the last 2 years. A lot of cattle got sold off of there. And I wouldn't say that drought is gone. If you look at the drought monitor, it still exists, but it's gotten better. And as it's gotten better, people are willing to go out and they've got feed, they've got grass available, they've got hay. They feel more confident in their ability to take care of those animals and feed them. So that's some of what's driving these historic prices in the sale barns and this cash market, which is good. But you've got to use it. When the market's offering you these type of opportunities, you gotta put something in play. You can't just cross your fingers and hope they're still there in October, November when you wean and want to sell some calves.
Well, Tyler, great thoughts as always. Before we run out of time, floor is yours. I know I didn't touch on hogs or anything with that or look at outside markets, but just to wrap it up, any final thoughts you'd want to share or reiterate with folks just as they're looking at these markets and the volatility that continues right now?
I think it's going to be important to pay attention to the dollar, as the dollar is actually trading positive today, but we've seen a big sell-off in the dollar over the last few weeks, which has helped most commodities. And then crude oil was slipping a little bit. It's been on a pretty good uptrend over the last 3 or 4 weeks, fell Friday and yesterday, but a nice little rebound. And if crude stays positive and the dollar keeps trending lower, I think that's going to be positive for grains in the long run.
Well, great thoughts, great analysis as always. Folks can reach out, learn more. The best way, agmarket.net. With that, Tyler Schau, agmarket.net. Thanks for being on the show with us once again. We'll have to get you back on real soon. Have a great one out there at the rodeo in Wyoming. We appreciate it.
Will do. Thanks, Jesse.